Good morning, ladies and gentlemen, everybody. Welcome back to another pre-market live stream. Good morning. All right, so in other news, happy Tuesday to you. Happy new month of trading, I guess we could say. Got a fresh week. It's only Tuesday, right? You still got the rest of the week ahead of you. So it's the month of May, and the Federal Reserve anticipates buying ETFs. So just in general, there's going to be more intervention from the Federal Reserve into the financial markets. So, whether you think it's a bad thing, whether you think it's a good thing, at the end of the day, that's what's happening. A lot of intervention from the private banking system into what's supposed to be the free market financial system. But anyways, so that's still going on. That's still happening. All right. There's a couple penny stocks we can look at today that we'll touch on. Not that I even really like any of them for trading purposes. Well, maybe more trading purposes, but there's a couple penny stocks we'll look at. We'll take a look at a couple earnings plays. We'll obviously take a look at the stock market as we normally do, and then answer a couple questions along the way. All right, let's go. Let's rock it. All right, so real quick, you have this penny stock MVIS that, hold on, that's really long-term chart. So you have this penny stock MVIS that shot up to $1.14 today, or sorry, $1.70, excuse me. So this is pretty much the main penny stock everyone's watching. I think there's a move to be made for the stock. You're on the lower side of its cycle right now. So I do think that there is a potential move that the stock can have. Again, if you're going to be really long bias, maybe you have a target of 195. Ooh, hold on. Yeah, maybe you have a target of 195. So for me, I'm really not a big fan of it. If you look at it, look at the daily chart. Stock's already blown out, already been blown up. So if you're looking at this stock today, just know that you are extremely late. And there were people buying millions and millions and millions of shares down at 18 cents, 19 cents, and they're just dying to dump them onto you at $1.14, $1.80, $1.60, $1.70. So just know you're extremely late to the move. But yes, I think if you're going to trade it, if you break up, you can maybe target the $1.90 zone. If it breaks down, you could look at $1.30 for a dip buy to $1 for a dip buy. If we go down, look at the $1.30 to $1 for a dip buy. Go up, you can look at $1.90 to $2.20 for a sell. Okay. All right. Good morning. I'm short ENPH, maybe, and don't know for sure, but look. Yeah, ENPH in theory is a little overbought on the day. You just bounced off your 4-hour charts. You're on the bull move. Nah, probably don't want to be, well, maybe intraday there's a short move, yes, but overall I probably wouldn't be too short bias on it. Okay. All right, now I want to go touch on the SPY. So we're going to start here on the SPY. So as you guys know, I've been bearish as we went towards the 300, saying to be kind of bearish here, with expecting a move as far as 271. So we got to 277, started bouncing, which is also a very normal thing to happen before you could reach that price. Remember, we had explained that if this is correct, and if I am correct, and this is an Elliott wave, we'd expect this pullback to stop and then give us one corrective move down. If it doesn't, and it just keeps going up, at that point you got to say markets are probably going to move higher, right? If this move just keeps going up and we get through 290 and we start really pressing these tops, at that point you really got to be like, okay, we're probably going to move a little higher. But if this pullback fails under call it 289 or so, if we can fail under the 289 level, then we still can look and justify maybe a move lower to 277 for that corrective wave on the SPY. Okay. There's really not too much more I think we need to touch on the market because we've really hammered this in for the past couple days. The only last thing I'll touch on with the market for now is on the intraday perspective for the market. You're really sitting on trend right now. You're not overvalued, not undervalued. So you're not you're at a fair point, right, at the market, okay? Your bigger move, if it's going to break down and have a sharp move, it's only going to happen if it gets below, call it 286, okay? And so you have resistance marks starting at 288.30 and bounce level starting at 284. All right. I would stay on the bullish side of this move for the morning because we have come from below. We have held trend. We have gone over trend. We have tested trend a little bit. I would stay on the bull side this morning with maybe a move back up to maybe 288. Okay. But for me, I'm pretty much just neutral. I'll start getting active once we start to pick direction and either tag up at the 288 or we head down to 284. That's where I'll become active in the market. Or if we shoot up to 290, which I highly doubt happens, or if we drop to 281, which I highly doubt happens, then I would be active. So my activity points are basically going to be in these boxes. This is where I'm most likely going to start being active, the SPY. And in the blue box, this is most likely where I would be, neutral in the blue. So that's where I'll probably be more neutral, be patient, and when the market is near your gray boxes, that's where I'll probably be more active, okay? So we'll see how it opens today. If we were opening, down towards the gray box, right? If we're opening down towards, let me do this differently. If we had been opening today on the morning down towards the green, or if we were opening this morning, and there's still time to play. I mean, it's only 8:40. We still have time before market open. But if the markets had been opening near the red or opening near the green, then my bias would be bullish down in the green and my bias would be bearish in the red. But now that we're in the blue, I'm just neutral and I'm waiting for our markets to decide how they want to react this morning, okay? So my significant point to pay attention to also is, let me redo this, is that price level that I had here in the middle, right there. That red dotted line, that's a significant point right now on the day where over-under can create panic and short squeezes. So, again, blue neutral, red, green active, okay? Good morning, guys. Good morning. Buy Zoom for a bounce in the break of resistance. Possibly, yeah. I'm not sure. I haven't looked at Zoom yet today. So that should pretty much get us caught up here on the SPY for kind of my game plan going forward. Wayfair W reported earnings today. Really nice move that it's seeing. It actually has a bearish divergence that I kind of should probably short, maybe. But anyways, yeah, Wayfair had earnings day, reported really well, and stocks moving up. And before this morning, I was actually bearish on it, and so I might have been a little too soon to be bearish. Obviously, you can see that now. But before, I wanted to be more bearish on the stock. And the reason being is I seen a bearish divergence occurring on the RSI, but then the stock blew up and it completely shammed that whole analysis, so it wasn't working. But I will say, if you look at this from the daily chart, Wayfair is way overbought. Way overbought. So I think that Wayfair is a great price to be taking advantage of for selling. So regardless of the short being in the wrong time, I still think overall it's a great sell point on that stock for now, okay? That's a 1 hour chart. Yeah, so I think for me, going into the open, for Wayfair, I'd be bearish. So I think something like Wayfair, I'd be bearish going into the open for right now because it's so blown out. And then I'd wait for a dip buy if you want to be bullish, okay? Yeah, I'll take a look at mRNA. I'll take a look at Mark, because Mark was asked earlier. So this is a 89 cents. Just got to resistance. Let's see what the 4 hour chart looks like. Price action, resistance. Yeah, I'd be probably more bearish on that for now. Really? We'll see. I would say actually going into the open, I would be a little bit more on the bull side of this. Unless the stock is truly trying to change direction, it should bounce. If it doesn't bounce, that tells you the stock's getting weak. So pretty much put it this way. If Mark bounces out of the gate today pretty strong, then you might be more hopeful that it can hold up. If it really struggles to bounce out of the gate, given where it's at, then you know the stock's getting weak. All right? And I would say to be more on the bear side of the stock now. You already kind of blown up your high-end trend. I'd be on the bear of that. Okay. I am going to... I'll take a look at Gush, but first I want to look at mRNA. mRNA is a very popular stock that we have followed for a long time. All right? Well, I don't want to say a long... that sounds stupid, saying a long time. It's only a long time, basically, since the pandemic thing, which was back here. Basically, when mRNA started to blow up here, that's when we started to follow it. So we've traded all throughout here. We traded it a lot of times. So, let me delete these drawings. And I hope that when I do this, it'll make some sense, okay? So what does it look like is happening to mRNA right now, right? If we were to look at the stock mRNA that's on the screen, it would appear we're into, maybe like the early stages of a bullish pennant, right? Like a bull flag, right? We can kind of see a bull flag here, right? Maybe a nice little break up, right? So we're kind of in like a bull flag setup, okay? It looks pretty similar to this. It's a little smaller, but it looks pretty similar to this, right? That big old pennant. So like we might also be doing that, trying to make like a pennant, right? But what's the difference between these two? Sure, the first one's a little longer, took longer to develop, a little bigger. The second one so far isn't quite as big. Maybe it will be as big. We don't really know. But for now, given how we're looking at it, we would say the first one was bigger, maybe a little bit longer to develop. But the most important is the first one started in the buying cycle of the trend. This one is starting in the selling cycle. So you're getting what looks to be a bullish pennant occurring and forming at a really good selling point. Whereas you had a bullish pennant occurring previously in a buying point. So this would be a more reliable pennant to trade, whereas this one you're looking at is far more high risk to trade. Where I would be less, I really wouldn't want to be putting my money on the pennant up at this price. Because I know the trend, the true trend of the stock is down at 38. Right? So we were on trend, below trend, on trend, below trend, forming a pennant until we broke up and above trend. So we've broken out. So that was the breakout. Right there, you broke out as you were getting through trend. So your breakout was through trend. Now you're forming another pennant well after you already broke out as you're in the high, good, high risk buying point and you're at the good selling point. So I would say not to be too much of a swing trader on this, in the sense that I just don't see it as a good value buying point. Not that you can't make money on it, it's just not a good value buying point to me, based on trend, okay? High in the buying cycle, baby. Set exactly, Angel, yep. Yeah, it probably does have, oh, that was another thing I was going to mention, too. Let's say that this does break up, right? Let's say it goes up to like 60. Look at where the RSI is currently. The RSI is at like 59, whereas on the breakout move, like here, it was all the way at like 90 almost, right? So if mRNA pushes into a new high, let's just say today, tomorrow, or like 2 days from now, if it does that, and the RSI is anything but 90 or higher, it's a bearish divergence and it's going to sell over. So essentially, even if this does go up some, the RSI has to go well above 90 in order for the stock to hold its momentum to continue pushing it higher, or else it would most likely roll over and sell off. So you'd have that pennant breakout that just fails really quickly, okay? So no, I wouldn't be extremely bullish, but I would be like short-term, maybe intraday or one-day swing bullish on it. looks pretty, and again, you kind of have like, look at, you kind of have what, like a pennant, right? Looks like a pennant occurring, right? So yeah, I could see this break up a little bit today, but ultimately the pennant is pretty high in this 5-day chart, so maybe a push up to the 52s and you sell back down, you know? So, so yeah, I could see maybe a move if it breaks this wedge. Yeah, maybe like a move to 53, 52.80. I could see. Do you still trust stock? I mean, any company that's usually doing a reverse split is not good in the first place. So no, no. After a company, whenever a company is doing a reverse split, it's usually a bad sign. So no, you never trusted them before. Yeah. So no, you don't trust it. If ETFs are doing reverse splits, it's usually because they are a leverage ETF, and it's just a part of the actual process and the foundation of the leverage ETF that the company that manages that ETF will just naturally have to go through a reverse split for functional purposes of the ETF. So like they'll just naturally have to do it. Whereas a company doesn't naturally eventually have to do that. The reason that they end up doing it is usually to, you know, for purposes of not good, put it that way. Companies failing, right? They might be getting delisted, so then they have to do a reverse split to increase their share price to get it back up in the requirements of, you know, the publicly traded company listing requirements for the NASDAQ or New York Stock Exchange. So yeah, there's multiple reasons why you might do a reverse split, but if you're doing it as a company, it's usually very, very bad, or it's a sign that you're not doing well as a company. And then if it's happening because it's an ETF that's a leverage ETF, then that's usually just normal, okay? Right now, yeah, any potential trade recommendations? Not specifically, I don't think. Not right now, maybe. I gotta think. Let me think on that for the next couple of minutes. I would say the last trade recommendations we were really putting out were the cruise lines when they came out of that bull flag a couple days ago. Like that was our like CCL, NCLH, RCL were really our last like big recommendations on stocks for their bull flag move. And then the last one, I guess you could say, was the Tesla bounce, which was off of, I'll show you. Well, yeah, I mean, the last trade recommendation was short the market around 300. Then there was also long the cruise lines. And then here was the Tesla bounce off like this mark here at 670. We didn't touch 670. We got very close, 682. But to look for a bounce there, and you had almost a 100-point bounce. So those are really the last ones I could think of. And the reason I say I don't know right now is because I haven't seen anything that I'm really, really happy about the way it's set up. I think maybe the next one for me that I'm paying the most attention to is again still the airlines, which I think a lot of people are paying attention to. But I think the airlines are actually what I'm watching right now. And the reason I say that is because they're doing you know, sort of a bullish divergence, and just seems like the buying pressure is still pretty bullish down here in these bottoms. So anyways, that's really it, just watching airlines for now, but there's no particular setup that I'm on top of that I think is really amazing that's just going to be a great play right now. So still, for me, is just kind of watching the markets now. No. Let me take a look at CCL again. Actually, CCL is getting knocked down here, but so no, I don't think this is a buy the rumor, sell the news event. And the reason I say that, I actually see. Let me double check. I actually see CCL a little bit lower, maybe. And the reason I say that is we've already come down. We've tested the lower side of the trend. We've bounced. We've hit trend. We're moving back down. So I could see the event where CCL is a little bit lower. But let me just put it this way. Ultimately, if you're going to be buying cruise lines because you want to buy cruise lines and they're on sale, you're already at the prices to do it. You've been in the buying cycle for Since $26, you entered the buying cycle, essentially. Since 26. That's where you started in the buying cycle. Though you were still going down, you entered the buying place. But no, CCL and the cruise lines, they wanted to reopen like during the summer, and then I think Australia, New Zealand. The news this morning that's driving them down is from Australia and New Zealand pause the operations of cruise lines until August 31st of 2020. So those cruise lines aren't going to be operating out of New Zealand or Australia until at least of August. So that's the short-term news that's hitting the cruise lines today that I believe is driving them down. But overall, I mean, I think that cruise line, I really think cruise lines are a stock that you should just buy. I mean, do you really? I just don't. I don't see them going out of business, or someone's going to buy them out. Maybe it's Warren Buffett one day. I'm not quite sure, but yeah, when you're talking about the buy the rumor, sell the news with the cruise lines, everybody already knew the cruise lines were going to get hit. And then when you're looking at them now, we already know that they're going to try to reopen. So I don't believe any of the news surrounding the events of coronavirus is really anything that's surprising anymore, that's catching anybody really off guard, okay? Because coronavirus is so blown up now and everybody knows about it that, I mean, everybody's pretty well informed at this point. So I don't think there's much of that's shocking anybody, right? Like, oh, New Zealand's going to say you guys can't do cruise ships till August 31st. Like, that's not surprising. Like, that actually pretty much makes perfect sense to me. So, you know, a lot of this isn't surprising to anybody anymore, I think. How did I learn so much about trading? Basically started investing at 18. Everything that I pretty much did since, basically call it 15, basically my teenage years. I bought and resold cars. I painted cars. So I was already my mind was already well underway in the business of making profit. My brain was already well underway of making my own decisions, making my own money. I can make a dollar bill myself. I don't need you to make it for me. Like, that was my mindset. I know how to make money. I could go down the street, landscape someone's house. I'll make $10 an hour at, fit. Then I can go and take that money and then I'll buy a car. And then when I buy the car, I'll have this much money left over, and then I can paint it with this bumper, and then I'll be able to make $600, and I'll get the next car, and then that car is going to get me to $5,000. When I get to $5,000, I'm going to get to this. So I was constantly just already turning, flipping, making profit. So my mindset, very young age, was already entrepreneurial. And not that I'm but anyways, yeah, I was already very entrepreneurial. And then at 18, I really started learning a lot more about investing, specifically because of my dad. And then that's basically history. And then I started trading, playing around, losing money. I made a lot of good investments at a young age, because when I was 18 and I really started investing, and I had a bunch of money saved up because I was buying and selling cars, painting cars, a lot of that business, selling stuff on eBay. So I had money saved up, and I made a lot of good investments when I was like 18. And the reason being that I'll say mostly is because I timed the market perfectly. Basically, when I was 18 and I started dumping all my money into investing because I was young and I knew I could, I was buying in the bottom of 2008 unknowingly. Like, at the time, I knew the market had crashed, but I didn't know what I knew now. And knowing what I know now, I literally bought the stock market at the most perfect time you could when I was 18. And I made a lot of money doing that. So part of it was luck, that really kind of got me on underway, I got to say. But the best investment I made was in healthcare. I bought, I'll show you, it's a mutual fund. This was like my first big investment. PRHSX. It doesn't look like anything on a stock chart, but let me show you. Here's a 20-year chart of it. So this is PRHSX, and this is a mutual fund managed by T. Rowe Price. So this was my first ever big investment I ever made. And I bought it like at $16 right here back in 2008. That was like where I was investing, right here, right there, and like the most perfect dip of all dips. That's where I bought the stock market, but it was specifically this fund. Okay, so my first ever retirement account that I had, and I still have it. I can't contribute to it. It's an IRA. It's a Roth IRA. Excuse me. So it's a Roth IRA. I make my income now is too high to invest in this, and so I haven't been able to invest in this fund for a long time, or just my Roth IRA in general. Excuse me, my Roth IRA in general, because of my income levels. So the government restricts the government's law. The Roth IRA governmental law says Connor makes too much money. We're not going to allow him to get too ahead in life. We need to make sure he doesn't make too much more money. We're not going to allow you to invest anymore. That's basically what they said. So whenever you guys hear videos about 401ks being scams, Roth IRAs being scams, people are not lying to you. They're telling you the truth. There's a give and take situation. It's a give and take world. So you give some, but then you get taken from. So unless you can justify it, sometimes a 401k and a Roth IRA don't make sense. So they're not for everyone, I'm telling you. They are a scam at some points, and I can make videos on that. So when you see a video where someone says 401k is a scam, I'm telling you, they're not lying to you. They're telling you the truth. And then when you say like 401k is the greatest thing ever, they're not lying to you. Depending on the person and the situation, they can be a blessing. So it's a give and take world. But at the end of the day, the most important thing you can know about Roth IRA, 401k, IRA, simplified employee pension plans, retirement funds, and plan, all they are is a law. They're not investment plans. They're laws set in place by the government. The government allows the individual to choose to follow if they like. The illusion of choice is also what it is. Okay. So this was my first ever fund I invested into, and I bought it when I was 18. And so that account has seen, I think now it's about 12.5% annual return since inception. So I've been getting a 12% return on my money for the past 10 years, 12 years on that account. So that one's done phenomenal. So that's that's not a good account or representation of what it's normally going to be like for an investor, right? For me to give you guys that example, for me to put that video on YouTube and see, hey, you can do it, I did it. It's like, no. Like, to just come in right off the boat and get like 13% return for almost 12 years on your money, most people, it's not going to happen. And that's because I did get very lucky at the time I chose to invest, and I picked the '08 bottom, and I bought healthcare, the number one sector that like boomed incredibly. And the reason we picked it was because my dad was getting older, and he knew that he was going to have to start spending a lot more money on healthcare and doctor's visits and things like that. And since he was a part of the baby boomer group, he knew that the biggest population group growing up was going to now start needing medical supplies, medical visits, more so than ever. That sector should do well. So in '08, bottom of the stock market crash, we invested into healthcare because we knew the baby boomer group was getting bigger, and so on and so forth. You can see healthcare just went skyrocket, anomaly. And now it's the biggest talking point in terms of political things. So from an investing side point, it would be extremely terrible for all investors in the healthcare world if healthcare went to a healthcare for all situation. Investment would go to the shitstorm. So that's kind of the talking point on the political side right now. For investing, healthcare will get destroyed. From the investing side, if it goes to a government-run system, you can pretty much just kiss those investments goodbye. If they don't do that and it stays the way it is, privatized, then the investment world will be happy. So it's a give and take world, okay? And again, I'm not here to debate what it should be, but I'm just telling you that's the way it will be, okay? Okay, that was a lot of talking. I'm sorry about that. You go to Cranbrook? No. So Alex, I mean, I don't know a ton about USO, and the only reason I really know much about them now is because of the oil market crash that happened. That's really the only reason I know about them, and I think we're going to have to pick up on that one the next time, only because it's 9 o'clock. I do got to run. I talked about that fund a little bit, maybe too long there, but by the way, my partner that does a lot of the coding for a lot of the custom studies that we make for Thinkorswim that we use is now kind of done tweaking and finalizing the standard deviation one. So even I'm going to get an updated version on it. But that's now going to be available on our website. I think end of the day today, or it's tomorrow, whatever he said. But the standard deviation channel that we have here is now going to be available. It's on our site. And no, it won't be free because he custom coded it and I'm partnered with them. But you can make it for free. I've showed you how to do that. So if you guys want the easy version without having to do all this crazy shit, then it will be on our site for purchase. If you want to make it for free, then I'll make a video showing you guys how to do that. But you're probably going to need 2 monitors. You might need like 3, depending on how you chart all your stuff out. You might need like 3 or 4 monitors. That's what I'm saying. Is we coded it so it can just go onto one chart perfectly. But if you want to be able to build it free, I can show you. But you're going to need like maybe 3, 4 charts open at once and maybe 2 monitors. But we'll play around with it, okay? So, anyways, with that being said, ladies and gentlemen, I will see you guys all tomorrow morning for another pre-market live stream. And other than that, everybody take care. Have a great rest of your day.